So moving on now to our second guest, David Livesey, as I said earlier, making his first appearance, I think, at an HBF conference, but a veteran of this industry. He's been around for nearly as long as me, and there aren't too many people who can claim that these days. David's been at Connells for 30 years. Not all of them, I'm sure, as Group Chief Executive, but that's the role he now occupies, the hot seat in one of the biggest estate agencies in the country. Now, David actually is here live as well, but he also pre-recorded his thoughts, and those were done before the Chancellor spoke, but he'll be updating his thoughts on the Chancellor's speech at the end. But lots of fascinating detail. David, over to you.
Good morning. Great to see so many of you logged on today. I'm going to share with you some data sourced from across the Connells Group, which will hopefully give you a flavour of how the residential property market, both new and second-hand, has been performing since we came out of lockdown just over 6 weeks ago. This slide is not advertising, it's to give you a flavour of the scale of the business that I'm sourcing the data from for you today. Connells trade through 600 high street estate agency branches. There's 25 different brands here, some of which you may be familiar with depending on which part of the country you are. If I give you Peterborough as an example, on Peterborough High Street, we've got a Connells branch, a William H. Brown branch, and a Sharman Quinney office, all competing happily against each other. 600 estate agency branches represents about 3% of the total number of estate agency branches in the UK, but we represent about 6% of market share, gauged by the number of instructions that we take into our business. So the data that I'm giving you this morning is sourced from a 6% market share player. That's the biggest market share of any estate agency group in the UK. You'll also see at the bottom some additional logos. Connells Survey and Valuation is one of the big three chartered surveying businesses. Some of the information will come from there. And the New Homes Group, which trades as New Homes Mortgage Helpline, Talk24 and NHPX, is a huge business specialising in new build mortgages and the management of part exchange properties for the house builder community. This is the kind of data source that I'll be sharing with you shortly. And okay, so this is a bit of advertising on this next slide. Again, just aimed at giving you our credentials in the specialist new build space. We're the biggest seller of new build properties in the UK, just over 9,000 last year. We're the biggest mortgage broker in this space. To give you a flavour of that, nearly 1 in 6 Help to Buy mortgages last year was arranged by the Connells Group. So you can see from this slide that we've got a real specialism in that whole new build sector, which hopefully I can colour in for you as I go through these slides in terms of what the market is doing, both new build and in the wider residential market. Okay, let's look at the top of the funnel. That's inquiries coming to us from the property portals Rightmove and Zoopla. You see here the levels that existed to the left-hand side of the graph just before lockdown. Instant drop into lockdown. People were still using the portals during lockdown in increasing volumes, and then a big jump as we came out of lockdown. And that leap has stayed right up there. You can see the 7-day moving average is the light blue line, just to smooth things out. But you can see those 6 weekly blocks have stayed really strong. So I'm pleased with this as a top level measure of buying demand immediately post lockdown. Okay, let's move one step down the funnel then from the portal inquiries to look at the inquiries that we're getting in as a business. And down the left-hand side of this slide, I've broken it down between phone inquiries and email inquiries. With the phone inquiries, you see a much stronger pickup, and that's really good news because when an applicant phones us, they're a much more committed potential buyer than if they simply send an email through. Over on the right-hand side of this slide, you also see the growth pre and post lockdown of first-time buyers going from 30% to 35%. So a notable increase in first-time buyers as a proportion of the total, despite the lack of high LTV mortgage money, which I'll come on to later. Why do we think it is that there's such an increased appetite to buy post-lockdown? Well, 2 factors that are worth talking about are the number of babies that are going to be born from December onwards, 9 months from the start of lockdown, in all probability, we will have a baby boom, and also the number of divorces that are likely to happen shortly after lockdown. Bad news for some, but good news for the market, because two people then need two houses rather than one. Now, just moving briefly to the supply side of the equation, comparing this year with last year, what we're looking at here is the number of total instructions, this is new and second hand, coming to the market during the period of lockdown, which falls away to virtually nothing. It's picked up very nicely, is staying strong, and if anything is still growing 6 weeks post lockdown. So this is good for a market which has been starved of stock for quite some time now. Now, this graph is a thing of beauty. This is my weekly sales graph. Sales agreed, reservations, new and second hand combined across that 600 branch estate agency. This is showing you that very steep fall off immediately post lockdown, virtually nothing during the course of lockdown. But this is what the economists would call a V-shaped recovery. It's an instant recovery out of the lockdown period. We expected to see it rise and then fall back. That hasn't happened, and in fact it's still growing. So we're now approaching pre-lockdown sales levels that we were seeing in late February and early March. That's quite extraordinary, and again, great news for the future of the market. Very briefly on house prices, you see a slight dip here over to the right-hand side of the graph during lockdown, but then a pickup. As properties start to come through to exchange, we're seeing no real impact on values, marginal move backwards, but overall I think the direction is still upwards slightly. Now, still on the subject of value and house price, here's some data that you probably won't see anywhere else. This is looking at our chartered surveying business, and it's measuring the incidence of down valuations where the surveyor doesn't agree with the valuation that he's been given on the property. And the average amount of those down valuations when they do happen. 18% of valuations are resulting in a down valuation, and that's almost identical to what was happening before lockdown. It was running at 17% there, and the average scale of the down valuation is 10%. This is really interesting. The reason being is that these figures are the same as they were before lockdown, but yet now remortgages are still a higher proportion of the total. And with remortgages, there's usually a higher incidence of down valuations, because at that point, all we have is the owner's estimate of the property value. So again, I take this to mean that the chartered surveyors are viewing the lockdown period very much as more of a pause button than a structural change in the market that they should be reflecting in their valuations. Again, I think this is very promising news. Okay, let's just focus now on pipeline, sold subject to contract but not yet exchanged. And in the left-hand graph here, what we're seeing is a reduction in abortives, cancelled sales coming out of that pipeline during the period of lockdown. And that's principally because people were pulling out of sales during lockdown, but we didn't know about it. The lawyers weren't there, the conveyancers had been furloughed, so that wasn't being communicated to us. And that also explains the peak immediately after lockdown of cancellations, which in itself would be alarming, but in fact it's not. Because if you trend that out, our abortive rate is very little different to what it would normally be. And we did some research when we came out of lockdown with our buyers and sellers and through the law firms who are doing the conveyancing. What we found was that on average, 75% of the people in that pipeline wanted to get on and get exchanged as quickly as possible. About 20% wanted to proceed but were slightly hesitant, and then 5% were withdrawing from the sale. Again, very promising. And over to the right-hand chart, we've seen that reduction in the pipeline because of the sales coming through and exchanging, because of those abortives, but now picking up nicely as new sales are coming into the frame. And I expect that very quickly to be exceeding the scale of pipeline that we had this time last year. And then on to exchanges. As you would expect, exchanges were depressed during lockdown, with most of the lawyers being furloughed and therefore little activity taking place, or if it was, then being stuck in a chain with another property where there wasn't the lawyer in place. And then now a nice pickup as that pipeline, as I've already said, starts to come through to fruition. And again, we expect to see that build up, particularly as the pipeline is rebuilding as well. Now we're looking at the critical issue of mortgage lending. On the one hand, we've got lenders now bringing out 10-year products at sub 2%, which is quite extraordinary, but we've got some real challenges on LTV. Let me take the graph on the left firstly. What that's showing is that during lockdown, remortgages, both normal residential and buy-to-let, accounted for over 70%. By remortgage, I mean remortgage and product transfers. But that's now adjusting back to a more normal situation. But the transactional mortgages are virtually all being done with the customer over the phone, which is a big change, and hopefully that will stay with us, make it easier for people to access mortgages. But over to the right-hand side, we're seeing the impact of LTV, low LTV lending from the banks and the building societies. And therefore, even though there are more first-time buyers available, they're having to put bigger deposits down. We've seen Nationwide pull out of 90% lending, but we've still got Accord, Platform and Bank of Ireland in there, and we're just about to bring forward a large tranche of 90% money. We need to see more lenders come into that space. That's really important for the market. And then very briefly, I just want to touch on lettings, because this is important, particularly to the buy-to-let lenders, as some of your new build properties may be sold to investors. On the left-hand side, you see a very big pickup in tenant demand immediately after lockdown. That's to be expected, pent-up demand that couldn't be satisfied during the period of lockdown when people couldn't move. And then it's fallen away, but it's falling away to a level which is still measurably higher than it was pre-lockdown, which is good. And on the right-hand side, we're measuring rental arrears. We've got a £400 million rent roll across the Connells Group. And this is measuring the incidence, i.e. the number of tenancies that are in arrears, and also the total arrears as a percentage of that rent roll. And the key trend here is that there's been no significant increase, and a lot of lenders, buy-to-let lenders, were worried about that, that tenants would start defaulting on their rent, and therefore their borrowers, the owners, the landlords, might start defaulting on their mortgages, and that's not happening. So I think the buy-to-let lender community will take some real comfort from the fact that our rental arrears are not increasing. Now, I've thrown a lot of graphs at you in a short space of time and given you a lot of data. I'm very happy to take any questions that you'll have on any of those charts. But it does feel as if this is a clear V-shaped recovery that we're seeing in the market overall. We've seen no concerning trends coming out of the 6-week post-lockdown, and we're very optimistic for the next few months. Thanks very much.